Why would institutional investors such as local authority pension funds invest in emerging markets, do you feel?
Well, I think emerging markets are such a huge opportunity set today. You've got so many countries, economies and companies. The biggest element, I think, why local authorities need to start thinking about emerging markets is the transformation you're seeing at a corporate level. Yes, they've got attractive macro, there's huge change structurally taking place within their economies, but what you're seeing is companies themselves are changing, they're evolving, they're getting better. They're adopting more Western styles of strategy, of corporate governance, and that is enabling them to better capture that profitability and that growth that we've seen in emerging markets over the past few years. So there's huge opportunity within the asset class. And then I think, pertinent to your investor base, the institutional investors, by owning emerging markets, they'll get access to long-term capital appreciation, and emerging market equities are somewhat lowly correlated to other asset classes. So there are diversification benefits to be had as well.
So how should investors think about accessing emerging markets?
Within emerging markets, there is such huge range in the quality of companies within our universe that being passive indirectly means you end up owning lots of companies that if you actually looked at them, kicked the tires, looked under the bonnet, you would not want to own these. If you look at a market such as China, if you were to buy an ETF for China, passive investment in the index, about 3/4 of your investment is in companies that are owned by the state. And their goals are largely dictated by the state. They are social goals, economic goals. They don't care about delivering profits. They don't necessarily care about delivering returns to shareholders through dividends. You need to be selective. You need to be active.
What do you think is the most important factor to look at when investing in emerging markets, micro or macro?
If you are an equity investor, you are not buying economies. What you are doing is buying shares in companies. And what drives share prices isn't the macro, it is the micro, it's the fundamentals, it's the profitability of a business, it's the management team, the quality of that management team and their corporate governance standards, and it's the valuations, it's the price you're paying for those shares initially. That determines the return you get. It's not about macro.
Does a value approach work in emerging markets?
I think value investing in emerging markets is perhaps different to value investing in developed markets, because you have a lot of value companies that are, in essence, value traps. So companies that are cheap today will remain cheap tomorrow because there are barriers to their valuations mean reverting, and those barriers are typically along the lines of corporate governance, poor management, not putting in place the right strategy, not delivering profits.
What is your outlook for emerging markets?
We're optimistic on the outlook for emerging markets, and a lot of our optimism stems from other people's pessimism. Sure, there are challenges ahead for emerging markets, macro challenges, potential corporate company level challenges as well. But we would argue all of that and perhaps more is reflected in the valuations today. When you're looking at the valuations, emerging markets today are cheap relative to their own history, and they're at record discounts to developed markets as well. Yes, I said there are challenges, but there are also real signs that improvements are underway. Ultimately, we think fundamentals drive markets longer term, and that means you need to see profits start increasing in emerging markets to close that valuation discount. And we are seeing signs that is happening. Profits are beginning to turn in emerging markets, and another step change we are seeing is a change in mindset when it comes to capital discipline, capital allocation. Companies in emerging markets often prioritized growth over profits. Today that is changing. Today they are divesting assets, they are reining in their capex, they're focusing on the profits rather than the growth. And we think that is going to be a long-term driver for profitability of emerging markets going forward.
What stands apart for M&G when dealing with emerging markets and investors like the local authority pension fund sector?
Well, I think our product has a very good track record. We've got a clear investment philosophy, a clear investment process, and a clearly differentiated method of constructing a portfolio. Our value bias as well sets us apart from many of our peers. And we've delivered a very good track record in the 7.5 years that the fund has been going.
Well, thank you very much, Rob.
Thank you.